the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian. I will take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares moved higher today, as all eyes remained on US interest rate movements for September and beyond. So if you look at the Straits Times Index, it was up 0.44% at 4,249 points. At about 2 p.m. Singapore time, 2:05 p.m. Singapore time. And we're looking at a value turnover then of around 668 million Sing dollars in the broader market. Now let's take you through the closing numbers. The STI, as we shared with you earlier, ended in the green, up 0.52% at 4,253 points. Now in terms of value turnover, that's 1.28 billion Sing dollars. Gainers outnumbered losers, 330 versus 176. Top advances for today, we've got for New Incorporation USD, UOB and DBS. And top decliners, we've got here CMS, Jardine Cycle and Carriage, as well as DFI Retail Group USD. Now, in terms of counters to watch, we have SingPost because the postal service provider's operating profit for its Q1 ended June came in at 3.4 million Sing dollars. That's a 60% year-on-year drop. Now, elsewhere from Tesla raising the price of its Cybertruck Cyberbeast in the US, to how postal services around the world are cutting off parcel deliveries to the US, we've got more corporate and international headlines in focus. Plus, what to watch when Fed Chair Jerome Powell speaks at the Jackson Hole Symposium in just about a couple of hours' time. Now, joining me on a Friday is Benjamin Goh, Head of Research and Investor Education at SIAS. Ben, welcome back to the show.
Hi, how's it going?
Good. And Ben, let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises when we look at the biggest movers?
Well, as you mentioned just now, the STI index moved up about almost 0.5%. Obviously, the three local banks had something to do with it. Between the three of them, they advanced between 0.2 to 0.9%. What was interesting was a couple of specific names. Singtel closed more than 2% up. I think it's really on the back of DBS Research raising Singtel's target price to $5.04. So that really provided an upside catalyst for the stock today. Another counter which was quite interesting was ComfortDelGro, which showed surprising strength today with a 2% advance. ComfortDelGro for the longest time has been one of those stocks where it's totally not sexy, but has quite a bit of unlocked value, I believe. So it could be time that the market is taking another look at it. For the week itself, STI index closed up about 1%, which is actually kind of interesting given what's been happening in the US as well as other major markets. And also the fact that, most people are holding their breath for Jerome Powell to speak at Jackson Hole tonight.
Okay, and if we zoom in on some of the companies to watch, Ben, we do want to take a look at SingPost because its operating profit for the first quarter ended June came in at 3.4 million Sing dollars, which is this 60% drop on the year. How have investors reacted to the numbers thus far, and how much of this reaction is justified?
Well, today the share price was basically flat. So it was plus minus about 0.5% today, as well as the whole week, actually. So it does appear that investors have taken the profit drop in stride. I think the bigger challenge for SingPost is actually its long-term stock performance as well as its ongoing business strategy. If you take a look at the performance of the STI for the last 5 years, it's actually up 67%. But SingPost is actually down 28% in the same period. So, if you look at the company's current restructuring exercise, I think that's definitely in the right direction. But again, this how things take time to unlock value. One analyst that I'm, in constant touch with has actually put SingPost 12 months target price as 70 cents, which is a 40% upside compared to today's price. So perhaps SingPost is one of those companies where you need to wait a bit in order to have a significant payoff.
Okay, and Ben, from SingPost, let's have a look at LHN, the Real Estate Services Group's unit Collywood, the co-living unit. It will launch a co-living residence with retail offerings at the former Bukit Timah fire station in September. And this follows LHN's proposed spin-off listing of Collywood on SGX's main board. How significant is this for the firm if we look at share price movements today?
Well, specifically, if you look at the share price, the company closed 1.5 cents down. That's a 1.8% decline today compared to the STI's 0.5% advance. I think there's a combination of a few things happening. So firstly is if you look at the company strategy, I think it's in the right direction. So, spinning up Collywood from the parent LHN is probably a good idea so that both parent and child company can then focus on their respective business models, which are actually quite divergent. If you look at the sector itself, co-living spaces, I think that's a relatively new concept, but is steadily gaining popularity given the high rental costs and the changing needs of, renters, So quite a lot of people don't want to be locked in with a 2+1 lease nowadays. They could be road warriors or, tech wizards who want to move from country to country. The other thing is, of course, the vast majority of rental leases in Singapore are not co-living spaces, which means that this could be a big deal if the co-living concept takes off, and it could be a very stable business as well. Because if you look at industry competitors who are already offering co-living spaces, some of them are reporting a occupancy rate of more than 90%. So that's good, and I think it's a good idea for Collywood as well as LHN to get into the action early on.
Now, if you're just tuning in, we're now in conversation with Benjamin Goh, Head of Research and Investor Education at SIAS. Well, Ben, let's very quickly look at this company called Design Format, which recently made its debut on the SGX. On Wednesday, in fact, UOB Kay Hian initiated coverage on the company, assigning this interior fit-out business a buy call and a target price of 37 Singapore cents. And that is, of course, after Design Format listed on the Catalyst board on the 15th of August. What do you make of the latest remarks by UOB Kay Hian?
Well, I think there are solid reasons behind the recommendation. So having a look at the research report itself, some of those reasons include, firstly, the company actually reported a compound annual growth rate for revenue and profit as 35% and 77% for the 2-year period, 2022 to 2024. Obviously, these are great numbers, but also equally obviously is that the caveat here is that it's only for 2 years of data. So doesn't quite make a trend, but it's a good start. The other factor in favor of the company was that its 2025 order book, or rather 40% of its 2025 order book has already been recognized in the first quarter. So that bodes really well for the company to be able to deliver on its entire 2025 order book and perhaps maybe a little bit of surprise on the upside as well. If you look at the balance sheet, fairly robust, relatively low debt-to-equity ratio, and it's even the target price of 37 cents. The company is still valued relatively cheap compared to its sector peers. Now, the overhanging concern, I think, is that this is still a relatively small company. Does not really have a technological or business model moat. So it's really dependent on stable economic situations, growth in the regional and local area. So I think one of the main factors would be this the macroeconomic picture, right? So if things go south as we head into the end of 2025 and 2026, how much of that is going to impact the company?
Okay. And, Ben, I do want to talk about two electric vehicle makers today. One is NIO and one is Tesla. So at NIO, shares rose by more than 9% in early trade today on the back of its new ES8 SUV. And when it comes down to Tesla, Tesla is raising the price of its fastest variant of the Cybertruck, the Cyberbeast, I believe, by $15,000 USD. Brighter days for the EV industry, you think?
Maybe, definitely a maybe, but I think the industry globally actually faces quite a few existing structural, risk factors. Okay, so if you look at the Chinese EV industry, right, it seems to be in a perpetual restructuring phase in that, you've got cutthroat competition continuing to weed out a lot of smaller players. New itself made a big splash today, right? But it actually has got a market share of only between 2 to 3%. That's actually very, very far behind BYD, the market leader, which has a market share of about 32 to 34%. So it's only 1/10 the market leader, and really it's getting a lot harder for EV manufacturers to export their products to the EU and the US because of tariffs and other trade restrictions.
Yeah.
If you look at Tesla, the Cybertruck is actually, in Hollywood terms, this will be classified as a flop. Elon Musk actually guided to have he provided guidance of 250,000 units sold for 2024, but the actual number of units delivered was only 40,000. So it's very, very low. And of course, if you look at the Cybertruck, it's actually an acquired taste, right? I mean, I wouldn't buy a Cybertruck.
I like how you say that it is it kind of reminded me of something that I saw in a movie. I'll share with you later on. Off air.
Perhaps it's like Labubu dolls, pretty much in the quest stage. So I think what will move the needle for the industry as a whole is that governments committing to EV subsidies, as well as perhaps mandating a prohibition on non-EVs, past a certain point, just like Singapore, right? But if you look at the world's largest economy, the US, they're actually going in the opposite direction. So Trump is, I think, rolling back the subsidies. So I think this, developments from New and Tesla, good for the companies, I think, in some ways, but probably not going to be the thing that will move the needle for the industry as a whole.
Okay. And Ben, you talked about tariffs, and in fact, postal services around the world are cutting off parcel deliveries to the U.S. because of this fast approaching end of a tariff exception for low-value packages that is sowing chaos in global shipping. And I suppose the issue here is not just about the tariffs, but the lack of clarity on how duties will be collected, how data needs to be submitted. So how far have global e-commerce players priced this in their share prices? And do you expect any knee-jerk reaction next week if the exemption is not extended?
I think the news of the news have already been priced in, but I don't think any kind of operational risk have been priced into the stock prices itself. If you look at the stock market performance, Amazon and Alibaba are the two biggest, right? They are down about between 2 to 3% since the start of the week. If you look at Temu is Temu's parent company, PDD Holdings, was up about 3% last night in the U.S. market, but really, that's on the back of very volatile trading. Shein is not listed, so we don't really know. Of course, Shein as well as Temu are the biggest when it comes to low-value, package deliveries to the U.S. So I think the end of the tariff-free deliveries for the sort of packages is actually a big deal for the companies from an operating model perspective. But I also think that it is actually overshadowed by other narratives. So again, if you come back to Amazon and Alibaba, whenever we talk about those two companies, we don't really talk about their online marketplaces anymore. We talk about their AI developments, right?
Yeah.
So we want to find out whether they are using the newest chips from NVIDIA. We want to find out whether they're developing their own silicon. We want to know whether they are winning the market share for AI data centers. So that's a broad narrative. If you look at Temu, or other PDD Holdings, the stock price has always been a little bit more on the volatile side. So can't really say whether this is a factor in the recent price moves. But I wouldn't be surprised if there's some kind of knee-jerk reaction next week for Temu.
And finally, before I let you go, Ben, Federal Reserve Chair Jerome Powell's comments at Jackson Hole Economic Symposium due in a couple of hours' time. That is in focus for today. And that will mark his last speech as Fed Chair. What should we keep our eyes on this time around, particularly in terms of the language use?
Well, since Trump took office earlier this year, the Fed has got two very competing, diametrically opposite goals. So one is to fight inflation, and two is to make sure that the U.S. economy doesn't tank. Now, on the inflation front, the U.S. CPI is still over the Fed's 2% target. So there's some justified concern that Trump tariffs are going to push inflation higher. We are seeing some anecdotal data points coming in, but we get a fuller picture as we head into the end of the year. And of course, the U.S. Labor market is now at a tipping point because the last jobs report came out was really, really concerning. So the key, question on everybody's mind right now is whether the Fed will cut interest rate in its September meeting and by how much. If you look at the market data, or rather you look at option pricing data from the Chicago Board of Exchange, there is a 70% probability that the Fed will cut the interest rate by 25 basis points in September. So the kind of information we are looking out for from this evening out of Jackson Hole is any kind of guidance or narrative or maybe some kind of smile or a wink from Jerome Powell as to whether he is thinking of cutting interest rates by how much, his views on how bad the labor market is getting in the U.S., so on and so forth. Also, wouldn't put it past the Fed chair to discuss a broader change in any kind of monetary policy that has happened before for Alan Greenspan as well as Ben Bernanke with regards to the 1990s tech bubble busting as well as the 2008 great financial crisis. So we are in a kind of a pivotal moment in terms of economic situation in the U.S. So any hints of any broader change in monetary policy coming out of the Fed also would be very, very interesting. So that's what we'll be looking out for this evening.
Lots to watch indeed. Thanks so much for the insights, Ben. Hopefully we can also get some rest over the weekend as well after looking through the speech. Thanks so much once again. That was Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for joining us today.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.